how to go make their rental properties a better deal. And on the other hand, I have retirees and business owners and high income people and doctors and lawyers and realtors and all that kind of stuff. And they just say, Eddie, we just want to invest in something that has cash flow with not a lot of headache. Bam.
All right, guys. Hey, welcome to another episode of the Practical Wealth Show, where we talk about how to be the bank, how to manage your cash flow, and today, how to generate, what do you call it, alt income, alt investing, how to basically generate cash flow outside of your labor. Okay. Yep. And so today, my guest is Eddie Speed. He's a veteran in the note investing world. Okay, with over 45 years of experience? Okay. Since 1980, and he's secured and closed more than 50,000 real estate secured note deals. And he's the founder and president of Colonial Funding LLC, and leads one of the most active note buying firms in the nation, acquiring, brokering, performing, and non-performing. I want to talk about the difference between those two notes. And he's also the founder of NoteSchool, a respected training academy that has thousands of investors and in note strategies. And we're going to talk. I want to hear about your journey from in mobile home to building a multi-million-dollar empire, because I like the origin story of the entrepreneur. Like, you got bit on the wrist by a radioactive spider, and now you're a superhero.
Yeah, that's it.
So, Eddie, welcome to the show.
Thank you.
And tell them what I didn't tell them. And then I want to get in here because we got into it. I said, oh, stop. This is good stuff for the show. So we're agreeing before we start recording. Thank you. Welcome to the show.
Thank you. I just stumbled into this business when I was 20 years old. So I would love to tell you that it was this long thought out, well-planned deal. The answer is the guy that later became my father-in-law introduced me to this business. And this was in 1980. Mm-hmm. And so it was a very disruptive time in the financial markets. Interest rates were super high, inflation. And so, but that every time there's something wrong in the market, it causes some opportunity.
Yeah.
And so at 20 years old, I didn't quite understand that, but I got to go work kind of at the foot of the master. And my father-in-law was one of the pioneers of this idea of buying particularly seller finance notes. So I started with them in 1980. My wife and I married in 1982. By the way, we will have been married 44 years now.
Wow, congratulations.
So anyway, we've been doing this business, and it's been quite a journey and learned along the way. But basically, what is the note business? And that is, I buy first mortgages on people's property.
Okay.
Primarily houses, not 100% houses, but I buy first mortgages. So I'm the bank. I am the bank.
Right.
And I say that compared to other, financial planners used to call other type investments other than traditional stocks and bonds. After 2008, they kind of named that as alts, meaning alternatives.
Alternatives, yeah.
And the most common thing in real estate was people bought either rent houses or they bought into real estate syndications, predominantly apartments.
Mm-hmm.
And our industry right now is really a superior investment to those, although it's not as well known. People say, why? Well, there's really three reasons.
Okay.
The first reason is a rent house compared to a note.
Mm-hmm.
A rent house is if you had $250,000 to deploy, after you paid expenses, you're going to net about $900 a month. It rents for $1,800, but 50% of your rent goes out in expenses. And that's not paying a bank payment, by the way. That's not making a mortgage payment. Expenses went up after the virus at 2.5 times what rents went up. That's a problem, right?
That's a problem.
And so firstly is cash flow. If $250,000 in, if you bought $250,000 worth of notes, you're going to get an average of about $2,700 a month. So 900 versus 2,700. That's called 3x, right?
Yeah.
Do that math.
I can do that math.
Flow is good. The second thing is when you buy a first mortgage, you have a cushion factor. So if you pay $250,000 for a mortgage, the property is worth more than $250,000.
Right.
Right. So you have a cushion in your investment. God forbid something goes wrong. Low percent chance something goes wrong. But if it did, you have a protection built in. And the last thing is the most important thing, if anybody's ever owned a rent house, is brain damage.
Okay.
You can own essentially 55 rentals or 1,000 notes for the same level of work. Whichever one you want, it's the same level of work, 55 rentals or 1,000 notes. So a lot less brain damage and more cash flow.
Right.
And today people kind of like that idea. And if you have a syndication, if you're invested in a syndication, you got no control. You're in a market that's declining down 20 to 25% and probably not stopped at that decline. And your money's invested with another guy that makes all the decisions. If you own a note, you have 100% control. You own the note.
Wow. And it's funny. I want to jump in there because I one of the things we talk about at Practical Wealth is the five principles and the 3 rules of investing, which you just hit on. 1, invest in what you know, or invest in knowing. That was what I'll add to that, right? Invest in what you can control. Can you influence the outcome? Does it cash flow? And my 3rd rule is, which is most people's first rule, is don't chase returns. And I find most people are chasing returns.
Drunk on yield is what I like.
Yeah. Okay. I like that. You're drunk on yield.
Well, here's an example, right?
Mm-hmm.
I built a school 25 years ago. I've been buying notes for 45 years, right? I built a school 25 years ago because I met people over and over and over that were just private investors and they didn't want to have the job of having a rent house, or they didn't want to invest in something they had no control over, like a syndication.
Mm-hmm.
And so they said, I'd love to invest in notes. So send me a note. And I'm like, do you know what you're investing in? No, but you do. No, well, don't bet on what I know.
Right.
Bet on what you know. And so people become good investors when they have a level of knowledge that they can make a competent decision. Competence equals confidence.
Yes.
How many times have you ever seen somebody invest in something and then they couldn't sleep at night? Well, that was a terrible investment.
Yeah.
So I have a theory that I want our students to learn how to invest in notes. You don't have to buy 50,000 notes to know enough to buy a note. But we've been teaching for 25 years and we've gotten pretty good at giving simple training that's got a deep meaning, but done in an understandable way. And so today, the market's pretty kind to us because rent houses aren't really making money.
Mm-hmm.
And people say, well, rates are going to go down. Okay, rates go down. How does that make your house have more cash flow? Today, if you bought a rent house, this is crazy math, Curtis. Today, if you buy a rent house, you're going to get consider you're paying cash. You're not borrowing money at the bank. You're going to earn about 4% of your investment dollars per month. For every 100,000, you're going to earn $4,000 net income per year with a rental. 4%. They call it a capitalization rate. That's kind of right. You buy a note, you're going to get about 10 to 11.
That math works better for me already, right?
Okay.
Yeah.
And so when you look at it like that, how does this work? Your rent house makes 4% a year, but your lender's charging you 7.5%. Because if you go get a brand new rental property loan today, good customer is about 7.5% interest. Wonder who's making more money out of a rental today?
The bank.
Seems like it's a good day to learn to be the bank.
Yeah. It's funny because investors see I try to teach people that you got to think the opposite, right? Like how to be the bank. Because that's one of the things I teach them, be your own banker, using life insurance. But they see the house as the asset. And I said, but I'll ask them, I said, well, to the bank, what is it? and they don't get it right away. I said, it's collateral, right? And their asset is the note. So is there a way you could kind of integrate that into what, if you're already a real estate investor, you could, diversify or blend some of this stuff so you have more protection, cash flow, so on and so forth?
So a lot of people that come to NoteSchool, Curtis, have rental houses.
Mm-hmm.
And there's an argument, and there's something we can teach down the road, like how would you convert your rentals to a note? And I show people how to do that. I don't want to get too wrapped around the axle on that today, but it usually is going to make your cash flow about 2.5 times what you're getting right now if you're renting a house. But somebody says, well, I want to diversify. I want to have some rentals and I want to have some notes. Okay, that's fine. But the answer is simply this. Who has the tallest building in most every town?
The bank.
There must be something to this.
That's right. That's right.
So, yes, a note is an asset. Well, what's a stock? Isn't it a piece of paper?
Yeah.
I mean, it's electronic today, but isn't a stock just a piece of paper?
Yep.
I mean, I know it's electronic, but what's Bitcoin? It's some kind of something that is probably printable on a piece of paper that says you own something, and it's not sticks and bricks. So we're all investing other things every day that aren't technically sticks and bricks.
Right.
And once again, people say, well, I thought rental properties were how you made wealth in real estate. And the answer is from 2012 to 2020, or really even 22, that was 100% true. It had a hell of a run. Which investment, Curtis, goes up like a hockey stick and never goes down? Which investment have you seen that does that?
None.
Exactly. That was kind of a trick question.
Yeah, people think that that's how it is, or if you look, the people you talk to equity guys, they'll show you all these Ibbotson charts of the market has averaged blah 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 since the Depression, which is not accurate, or the S&P has done, that's not accurate. Real estate always goes up, but during the 2008, you realize it can go down.
Look, every dog has his day.
Yeah.
Right. And we are in a note cycle. And a note is the same thing as a first mortgage on a house.
Mm-hmm. Okay.
So we're in a note cycle. I'm doing this podcast with you. And tomorrow, I've got a meeting with a group, and they have 350,000 clients with self-directed IRA accounts. Ouch. So they've known me. They've known me for 20 plus years, but they're calling me today. And of course, they know me well from the past. And they're saying our clients need something to invest in because real estate isn't working. And we know that you're the guy that really can help them do notes and do it safely and correctly. Right? Why would they be reaching out to me? Because they see their clients that are searching for the next good thing to invest in. And the market does change.
Right.
What screwed up rental properties is inflation.
And it's funny. People, let's say for a second, people think that rental properties are a hedge against inflation. But you're saying that's
I know that's what they said on Facebook, but I'm calling bullshit on that.
Okay, come on. That's why I want to talk about it.
I call bullshit when people start saying that. Mm-hmm. Because I started this in 1980. Okay, so my first job when I was going out finding notes, seller finance notes, I was calling on realtors, home builders, and real estate investors. And every time I walked in somebody's office, it was like a funeral. And they're saying, we're getting slaughtered with expenses. And then all of a sudden, Facebook and social media and everybody with a hot sports opinion, and rents are going to pace with inflation. That's not true. It didn't happen. Expenses did, but rents didn't. People say, yeah, but rents went up. Yeah, they did. but expenses went up 2.5 times higher than rents.
And if
And by the
wages
way,
aren't going up, you can't get more rent.
What's that?
I said, if rates go up, you can't get, what is that saying? You can't get blood from a turnip. They don't have more money to pay you more rent.
We've hit a glass ceiling.
Yeah.
Is what you're saying.
Mm-hmm.
And so here's the thing. These are things that caused it. And I've been doing this for 45 years and I think about it all day, every day. So I can quickly kind of tell you this or that. And we've done a lot of research, and I've worked with specialist accountants who manage books for lots of rental property owners, hundreds of rental property owners. And they're the ones that's given me their numbers. I didn't need to go read a chart somewhere. I didn't go to some research because, sometimes it's this or it's that. But I go ask the guys that are actually running numbers for big time landlords that have rental houses and say, what are their numbers? Well, their expenses went up by 50% and rents went up by 20%. Rents actually went up a little more and then they settled back down because once again, it's all affordability at the end of the day. You can only rent for so much money, as you said, right? So the bottom line is that's why we're better than those other markets. Let's talk about what notes do for people.
Yeah.
Right. So there's several things about notes that I have learned that people don't understand. One thing that we're really, really good at teaching is how to have liquidity with notes. Right. I have bought 50,000 notes. You think I funded them with my wallet, the money in my wallet?
Hopefully not.
I had to have some techniques to allow me to capitalize and fund the business. So I teach those techniques to students. And I can show you how to take a self-directed IRA account with not a lot of money in it, but yet you can own notes and you use other people's money to fund the rest of it. And I don't want to get too wrapped around the axle in every detail of how that works. It's just that you can use those types of techniques that now are common to us because we've been doing it for a very, very long time. And we're just teaching people. Think about what I really represent in teaching people the business. It's just simply a compression of time.
Okay.
They say that 10,000 hours. What do you figure in 45 years? How many hours have I got?
A lot.
Okay. Right.
Yeah.
And so I'm just giving people a compression of time. You can try 100 experiments, but I've already tried them. And I know that there's 2 or 3 best paths. So I just teach them, why don't you just do it this way? You can take a lot of detours in life, but usually what people want is a compression of time. And so I give people their time back. Experience, gray hair, should matter when markets change. Because you need to have somebody that's had some history, that's seen enough of life and enough cycles that they have a better indication of where that market scenario fits in. And is it a truth or is it not? So if you'd had me on your podcast 3 years ago when everybody was saying rentals were best for inflation, and I would have been the contrarian and said, I don't believe that's actually true, Curtis. And then you could go back and play that podcast and you go, it's hard to deny. Eddie actually called it.
Yeah. Yeah.
But you're saying, well, how did I know that? Because I've lived in a real inflationary time where I was dealing with real estate investors in the past.
People have such short memories. Like I was, I was a junior in high school. I'm dating myself now, in 1980. And I remember we had my dad family in the supermarket, meeting my dad's banker. And she was like, oh, I do have her name, Edna. And she says, look, money market accounts paying 18%, right? I know mortgages were like 17%. Cause I was like, Dad, what you should, I kind of started to figure out what we were making. I said, why don't you just pay off this mortgage? Cause he had he bought this house for $13,000 in 1963 with a 2% mortgage over 30 years. So he's like $115 a month mortgage, and he was doing okay. And I was like, why don't you pay it off? He says, and I didn't understand this for like 10 years later. He says, why would I pay it off? I have 1963 money. And it was and so he just misunderstood things about money and economics. And so people, oh, it's 6.7%, you know, and it's been higher and people are still doing stuff. What would you say? So I'm gonna fold this into a question. What makes today's market, because you've witnessed many cycles, particularly ripe for note investing, and then kind of tell me what trends you see coming in your opinion, in the next few years?
Well, generally speaking, the note business is good when other forms of mortgage lending is not.
Okay.
So loan origination businesses production's down about 70%. Okay, well, that starts being an indicator. And everybody blames the mortgage industry loan production 100% on rates. Rates went up to 7.5% when they were 2.5%. And I'm not saying that's not a factor. It is a factor. But the other thing that people don't realize is how tight mortgage lending criteria is today compared to what it was right before the virus started. So let me give you a scale. Mortgage Bankers Association has an index. They call it the Mortgage Credit Availability Index. The day before the virus started, call that January of 2020, right? It was at 185. Today, it's at 95. So, about half the people can qualify for a conventional mortgage that could qualify the day before the virus started. So that means that people have been left behind.
Mm-hmm.
Good people, like people that you and I would say they're very worthy and capable of having a mortgage and being responsible. And so that's where I help people fill the gap with seller financing. You know, we're not talking about financing somebody that's really a chancy borrower. We're talking about somebody that's, you know, and so those are when people say, how do you know the market's going to be good? Because I know my competition.
Mm-hmm.
And my competition is traditional lending. I mean, I'm not unfriendly with traditional lending. I'm just saying, in a way, you know, water's going to seek its own level, right?
Right.
And if the opportunity, figuratively speaking, is a low spot, then if I'm the low spot, I'm gonna get water that I wouldn't get before, because boom, I'm filling a gap.
Mm-hmm.
I'm filling a niche. I'm filling a need. I'm filling a void. Whatever word you want to use to do that, that is when we do good. And I will tell you that I do think rates are going to go down some. Right? This isn't rocket science, right? I just read data like everybody else. But I don't think it's going to change the cash flow of rental properties, because rental properties are not cash flowing well because their expenses went up so high compared to their rents. And so I don't think this is going to be some giant brand new gap where all of a sudden, like, yep, rentals are wide open again, baby, let's roll. You know, the president's got, you know, he's got the big, beautiful bill and everybody's going to be able to get bonus depreciation. And you and I say, yeah, well, bonus depreciation and all that kind of stuff is true. But, you know, when you sell that thing, the IRS wants their money back.
That's right.
So isn't that kind of like a debt? You get the benefit now, but you have to pay it later.
Yeah.
And I'm not saying depreciation makes no sense for any investment of any type. I'm not saying that. But what I am saying is that right now, people are having a really hard time with anything real estate related that has real cash flow tied to it. And notes happens to be that. And so my forecast for notes is that we got a good runway in front of us.
I love that. I got a lot of real estate investors that are clients that are sucking wind. You know, either the cities are making it less landlord friendly. Don't get me started with Philly, but you know, just these people are clueless when it comes to like economics and, you know, oh, they want to do rent control and all that kind of stuff. And you can, you know, people can stay in your house 6 months and You know, it's much simpler to be the bank. So let me ask you, through NoteSchool and through, you know, I know Colonial Funding offers done for you services. Is that accurate?
Well, here's the thing about it.
Okay.
The path that I take somebody down is you're not ready for my note buying business yet.
Okay.
Because you need to know enough to know how it works and what a risk blueprint looks like and how a note works and stuff. And so we start people down a path where NoteSchool trains people how to go do this. And we're pretty practiced at it. We've got some really good incremental training that helps people have a good, clear knowledge of how to do it, right? Then as somebody progresses in NoteSchool, then we connect them with some various people that have notes available, including our own company. Like, so the first thing they need to do is see what's possible. And so our next step is we have like a class.
Mm-hmm.
And it's not super long. It's like, you know, maybe an hour, hour and a half, right? But we call it a opportunity, look inside the opportunity. So we're able to kind of project down the road what's possible, so that people start realizing, oh, I want to learn more about that, right? Hopefully today you see two things. You see your regular clients that are looking for wealth or legacy building opportunities.
Yep.
And now all of a sudden, now we have another conversation. Oh, wait a minute, Mr. Real Estate Investor client. I met this guy that's a note guy, and he shows landlords how to make way more money with doing something with their houses other than renting them. And he seems like he's pretty seasoned. Maybe you ought to check him out. So see, now all of a sudden you even think about another different referral you could make, and I can darn sure help real estate investors in a way that they've not ever probably considered it before, right? And this is what I do. I'm a specialist.
Right.
But I work with hundreds of real estate investors, showing them how to go make their rental properties a better deal. And on the other hand, I have retirees and business owners and high income people and doctors and lawyers and realtors and all that kind of stuff. And they just say, Eddie, we just want to invest in something that has cash flow with not a lot of headache. Bam. We like notes.
That's everybody I talk to, you know. And and then
a lot of people, you're a good candidate to go speak on your podcast too, right?
Yes. And because I'm thinking about that, because I try to, you know, I look at their overall situation and it's like, all right, I have a lot of real estate people that are stuck. They're just you know, the deals are harder to come by, and they're maybe stuck at like 8-10 properties, or they were doing flips, and it's just not a, you know, it's just not there like it was, like, you know, and they don't know there's something else they can do. That's the kind of reason why I like doing the show. I just want to give you an idea that, hey, look, there's a lot of ways to skin this cat, you know, climbing this, you know, on this path to financial freedom, so to speak. And, you know, you don't know what you don't know, you know, so hopefully I think you're doing a great job of just, hey, look, you know, this is something you need to research. This is something that we can help. You already have some assets. You've got, you know, we talked about, you know, people that have a lot of money in in qualified plans and IRAs, and they're not wild about the stock market, right? And they have no yield, so they want to retire, but their retiring is getting to 65 and just starting to sell the shares because they don't cash flow,
right?
And, you know, so you have to change asset classes, and nobody's teaching them how to buy things that send them a check. So you want cash flow, but you don't know how to generate cash flow. All you know how to do is what I call kill the cow. Like, you milk the cow, cash flow, or you could slaughter the cow. You're a cattle rancher or a dairy farmer, right? So all they know how to do is kill the cow, which is sell the shares to generate cash flow. And so you're throwing them a lifeline, saying, hey, look, there's a third box, so to speak. That's why I love this. I love this conversation, Eddie. So, what didn't I ask you? I know you got it's an older book. I know you have Streetwise Seller Financing. Is that,
so?
I won't say it's relevant, but is it,
what
regulation?
I want to do?
Yeah.
What I want to do is give your audience. I want to give your audience a little package.
There you go.
Okay. And it's pretty simple. They're going to go to noteschool.com/practical, right? And here's what they're going to do. When they register for the class, then we're going to be very nurturing to get them, engaged in the class, and probably call them. And we're very careful about understanding who is actually in it. It's virtual class. It's live, but it's virtual. Right. And we really want to know who's in there, and like, who are we addressing? And there's anything unique we should address, or what's that look like? And then we're going to give them all kind of tools, right? We're going to give them an Ask Eddie book, which are 150 questions that I've been most commonly asked about investing in notes. And by the way, the answer's in there. Right? And so we're going to give them some spreadsheets where they can play with some of their own numbers. We're going to send them some flow charts so they get a sense of like what sequence you do things. And then we're going to be able to go in there and like show them in this class, we're going to show them some things that are beyond what is practical to do, like in this podcast interview. And I love this, by the way. It's a great format for us to go just be able to tell somebody the story that somebody says, you know what, I think I'm interested in this. Now, I'm going to say this, Curtis, right? Most things in life that we find are opportunities, even if we're super interested in it, most of us are guilty of not acting on it.
Yeah.
Sure. So if you don't register for the class, you don't get the chance. And if you register for the class and you don't show up, you don't get the chance. And I'm saying to you, go back and gauge how meaningful you think this interview was. I mean, to your audience, just gauge if you thought it was really good or not. Or was this something new and different and that you thought that could change your future? And that tells you its level of importance.
Yes, for sure. Like, we want people to take action, right? And, to me, the show is just to let you know, like, this exists, but then you've got to take action. Okay, does this fit my investor DNA, as a friend of mine calls it? And I think it checks off a lot of boxes that they need to research. Eddie, that's a great resource. I'm trying to look it up, make sure I typed it in right. But anything I didn't ask you that I should ask you, I think you put it out there, but I want to make sure
I'm going to reiterate something that is not. Sometimes you don't know things until you have a level of background. It takes a certain foundation for you to understand a principle. So I'm going to jump you to the solution and not just all the facts that lead to it, because that's too complicated at this point. Okay. But what I'm going to show your audience how to do in this class is I'm going to show them how to stretch their dollar. I'm going to literally show them how they could take $1,000 and using their money and somebody else's money, some of which I can help you find, right? I'm going to show you how to go turn $1,000 into $100,000 tax-free.
Yes, let's start there.
So once again, I've been doing this a really long time, and we have developed some unique techniques of how to do this. So impossible is when you've never seen it, or you can't visualize it. That's impossible, right? Even though it may be possible, it's impossible to the person that hasn't seen it.
Right.
That's why it's important that somebody comes to the class, because I'm able to slow it down and get on the whiteboard and actually show you the math of how you do this. Not just some, razzle dazzle magic trick. It's a financial modeling trick. And I've done this literally thousands of times. So I know how to do it. And I've shown a lot of people how to do it. And people love it. Without exception, people love it.
I love it. There you go. I mean, so if that's what you want, then you need to be on this class. I'm going to read it back out. I'm going to have my assistant put in the show notes,
Okay.
noteschool.com/practical.
Yes, sir.
Okay. All right. So I'm on the site now. I'll show you when we stop taping. Make sure I'm at the right place. I'm questioned out. You put it out there. Right? So I think the next step for y'all is to take this class, and let us know your thoughts about it. If you, as you're listening to this, if you think of somebody that needs to hear this, forward them the link.
Yeah.
And go out there. Let's make money, guys. We gotta, I think it's good because what happens is you can't let what I call TikTok, Facebook, or IG be your, you can't get stuff across in like 30 seconds, 1 minute, because you're just going to get the sizzle. And what Eddie just even today gave you the steak, and it's going to give you the steak in the class, so you can really get your feel, so you can really dig in. And guess what? Opportunities it's often disguised as work, right? Right. And and here's the thing. I'll end this with this, guys. Remember, we always say investing is about becoming something, not about buying something. And so it's be, do, have, right? So his process is about becoming, about learning how to do it so that you can do it. See, y'all want to go to do, but you haven't become the person that can do it, right? And you want to go right to the result. So you can't, that's the law, like a law of nature. You can't shortcut the system, but everybody wants shortcut. So it's take this class, learn how to do, and then you can have the 1,000 to 100,000 or, a portfolio. And why would you do that? So you can live the life you want on your terms, be with your family, all the stuff that money's for. Money's to do something. Money in and of itself is not a goal, right? It's just a tool.
I wrote that down. That's good advice right there, my friend.
All right. Well, at least I had to throw something in. That was me. And you were dropping all these gems. But Eddie, thank you so much. Any closing thoughts? I think you did it, but I always leave you with somebody with your brilliance, the last word.
No, I'm really honored to be on here, and I'm blessed that I do something that I love to do, and I feel like I'm at a point in my life where I get to help a lot of people. I don't mean I don't make any money, so don't feel sorry for me, but I get to help a lot of people, and I think we're in a point right now where people kind of need to reinvent themselves, and I think we show them a pretty good path to do that.
I love it. All right, guys, listen, go out there and make sure you reach out. Don't just hear this stuff. I'm not trying to just entertain you. It's infotainment, but you need to be taking action on some of this stuff. So hopefully you will. And this is a running joke. I say, guys, they're not broke on my call, but I say, if you're happy broke, I'm happy for you, right? So don't be happy. Don't be, sit in discomfort, lack of control, chasing returns. Make something happen, something that you understand that will send you a check every month. And then that's what, next class I'll be on. So don't you think I'm listing stuff? All this stuff is free consulting for Curtis, just so you know, so these interviews. So Eddie, thank you again, guys. Go out there, make it a profitable day, and we'll talk to you soon.